Stacey Widlitz, President, SW Retail Advisors, co-founder of Dealmakers. It's great to talk with you, Stacey. Thanks for joining us. When we look at what's going on here, it's been a retail apocalypse anyway, right? Because so many people started shopping online before the whole coronavirus took over the globe. Now what? Where do you see any pockets of strength?
Well, Nicole, you put it well. So, the demise of certain parts of retail, including the department store space, is not because of COVID. It's just accelerating the inevitable here. But certainly, retail across the board is getting hit. You're seeing brands, retailers with, 6 months of cash, enough to withstand surviving with no revenues, or the small amount of revenues they have online, which for most is about 15%. That's never going to make up the brick and mortar business here. I think one of the biggest issues is that there's been this lack of collaboration between the landlords, the malls, and the tenants, the retailers, to come to the table and say, how do we survive together? But certainly there are bright spots. You've seen, obviously, food stockpiling. You've seen anything to do with home and comfort, Lululemon. You're going to see TJX have its pick of the litter of good inventory over the next year, buying at pennies on the dollar. So there are some names that will certainly survive for the long term, but the ones that were in pain are going to have an accelerated demise.
Right. So you mentioned the winners were TJX, that's the parent of TJ Maxx, Marshalls. They own Home Goods too, I believe. Lululemon. Some of the ones that really had some momentum beforehand going in. So, Stacey, your thoughts on some of the other names that, you mentioned Macy's. That's down about, I think, 70% this year. We look at a name like Nordstrom, which opened up a beautiful flagship store here in Manhattan, 7 stories. It's down 55% this year. So a name like Amazon may be a real winner too, and Walmart. I don't know. What's the difference also between luxury versus, just some nice things that you buy that don't break the bank?
Sure, and I think there will be winners across the board, and the big get bigger. So, for example, you look at Target; it's been under a lot of pressure because, let's face it, it's going to be more expensive to operate in retail, even if you're gaining share, because you've got to do curbside pickup. A lot of people who are coming to do pickup in your store, that was a higher margin digital sale. Now they're going to ask for you to send it to their home. There's a mix shift to lower margin product, but certainly Target has already refurbished all their stores. They're absolutely gorgeous, and they've been stealing share from everybody from Victoria's Secret to the grocery stores. So coming out of the other side of this, that's a top pick here. Costco, again, top pick here. Walmart doing incredibly well here. So the big get bigger and the small get crushed in this environment. And certainly Amazon, because let's face it, they're open, they're providing, they're learning from their third-party vendors, and they come out of this at the end with a increased market share significantly.
Yeah. And, we mentioned names like L Brands, which owns Victoria's Secret now. The deal seems to be, under the microscope, whether or not that truly will happen. L Brands, Kohl's, another one that we looked at was the Gap. And they're all down, 7% this week. Any thoughts on some of those names, Kohl's and Gap in particular, or L Brands?
Sure. So you're seeing names like Gap and L Brands, which are distressed going into this. So, for an L Brands, they were selling a majority stake in Victoria's Secret, and they were going to focus on the Bath and Body Works business, which is an incredibly high margin business. It's been doing really well. It's been bucking all the negative trends in the mall. Of course, now you have to ask the question, in intimate purchases like makeup, like body lotion, anything that you test that's impulse, what does that business look like? Do you want to go into a store and try on, a cream, a lipstick? All those businesses are going to be under immense pressure. So, it's not a surprise that some of these deals are not working out. And, for the others like Gap, Old Navy was at a peak. Their operating margin is likely coming down after this, and we're going to see a massive glut of apparel inventory over the next year that we are just not going to know what to do with.
So name your favorites just in 10 seconds so I know the ones that you really think are the survivors.
I would say on your buy list, LVMH, TJX, certainly Lululemon and Montclair.
I see. LVMH, too. That's a great one. It's great to talk with you, Stacey. Thank you so much. Stacey Widlitz,
Thanks,
president of SW Retail Advisors, co-founder of Dealmakers.